The views and opinions expressed in this podcast do not necessarily reflect the views or positions of Acuma, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Hello and welcome to Acuma's On Point Podcast, a series focused on sharing the stories of people who are making a positive impact in the credit union mortgage industry. I'm your host, Peter Benjamin. Before we get to our episode, just a quick word from our sponsor.
This episode is brought to you by Consolidated Analytics, helping credit unions make smarter mortgage decisions from origination to servicing and beyond. With expert valuation, risk management, and compliance solutions, they provide the insights you need to protect your members and grow your portfolio with confidence. Whether it's due diligence or a collateral risk assessment, they help you navigate the market with ease. Learn more at consolidatedanalytics.com.
Welcome to the third episode of our Compliance Summer mini-series, where each episode will feature an intimate conversation with people who I consider to be experts in their field and supporters of the credit union movement. As a reminder, with each of these episodes, it's our goal to take a deep dive into various compliance topics that are impacting and reshaping the credit union mortgage industry. Our next guest in the compliance mini-series is Amanda Phillips, General Counsel and EVP of Compliance with ACES Quality Management. Mandy, how are you doing today?
I'm doing great, Peter. Thank you for having me.
Oh, it's absolutely our pleasure. I mean, you are most certainly a regular within the Acuma circuit, a familiar face, a familiar voice. So we are thrilled to have you here as you impart your words of on our listeners. I think it's going to be a great conversation. More to come on that. But before we get to it, as always, got to bring Justin into the conversation. The Hawk, what is the latest and greatest happening over at Acuma? And by the way, how are you doing today?
I'm good, Peter. How are you?
Okay.
You're okay? Okay. I like that.
Yep.
All right. You gave me nothing. That kind of hurts.
I'm sorry, man. It's just
my moment to get that dialogue going. And
I know I'm just tired.
I mean, it's not like you haven't been on the road for, a few times this year already. And we put on 3 in-person events that were spectacular. And I think our members had a lot of good things to say. So
I know it's just the body hurts, tired, can't get enough sleep. Just, I don't know what it is, man. Just keep pushing.
You know what? I totally understand that. But the good thing is now we're in the midst of the summer. And so you get to kind of take, as Krista would like to tell us all, the July reprieve, which does not exist.
No such thing. I'm back on the road like next week.
Exactly. See? All right, there we go. I love it. Well, here at Acuma, we are busy. We have Make Your Mark annual conference coming up in just a couple short months. So September 21st to the 24th. I kind of stumbled on those dates, but that's the 21st to the 24th. We're going to be in Denver, Colorado. So if you haven't seen anything from us about that, 1, I'm not doing a good job, but 2, what's going on? Come on, follow our socials. We're doing great. But we're going to have an amazing event planned. The agenda is coming together very nicely. Peter keeps adding stuff to it, as always, just to make it even more for all you guys out there listening. So it's going to be an exciting event, and we can't wait to share that with you. Other stuff we have going on, we have our networking and educational opportunities. So our newly launched servicing network is going to have their first meeting tomorrow, which is super exciting. So if you're in the servicing side of the mortgage industry, be sure to check that out. We have a great group of co-chairs lined up for you. So I'm certain that you're going to have a great time with that meeting. Our marketing network Q3 meeting, that's coming up in just 2 weeks. So it's going to be happening on July 23rd. So head over to the Acuma website to register for that. And then, of course, we have our webinar series, our fast tracks and inside tracks, which are happening all year round. So we can keep that education going on our ongoing basis. And then our favorite, I can't say our favorite because everything's our favorite, but our near and true dear to our heart, our On Point podcast, which just keeps the fun going and the education all year round as well.
Oh, yeah. Going back to the servicing network, one, it's a good segue to being part of the conversation today, but two, when you look at the history of Acuma, the servicing component, that servicing education is something that's been missing from Acuma, something that's been that we really haven't focused on. It's always been sales and originations and operations. So really excited that this is kicking off. The three chairs that we picked are truly subject matter experts in their field. I think it's going to benefit our members. I think they're going to walk away better educated, better connected, and again, just one more step towards us. When I say us, I mean the Acuma community becoming more well-rounded in everything that we do, right? Not just focusing on sales, but it's the entire mortgage ecosystem and the entire process. So really looking forward to that network just kicking off tomorrow.
Yeah. And the fun thing about that network also is it's one that grew, I guess it kind of grew organically within the Acuma community.
Yep.
Like they became one of the bigger communities within our community online forum. And just hearing from our members is like us putting it all together and trying to answer the need that clearly existed for them. So I'm excited to see it come to fruition as always, but
yeah, that one was definitely a member request. Like they definitely requested that one. So, they ask, we listen, we put it together, and here we go.
Yep, exactly.
Awesome, man. Thank you so much.
Of course, my pleasure.
All right, Mandy, back to you. All right, so obviously we have a great conversation on compliance, which is obviously why we are here. And I imagine we're going to talk about a whole bunch of different stuff. But before we get to that,
shortage of things to talk about.
Yeah, I'm sure they're definitely keeping you on your toes as of late. But before we get to that, I always start with the first question and with the last question. So I'm not gonna go away from that. So first things first. First question is, as always, what makes Mandy Mandy? So who is Mandy? It's again, the Acuma Point podcast is a people piece. People making positive impacts in our industry. That's always the first question. So for the people who do not know who Amanda Phillips is, who is Amanda Phillips?
Amanda Phillips is a Coloradoan with 3 kids from elementary school, middle school, and high school. 4 dogs. Yes, I am a glutton for punishment.
There is such thing as a crazy dog lady, but I guess that's
it might have happened. 3 of them are puppies, so they're 2 are a year old and 1 is 10 months old. So yes, there's a lot going on around here.
Okay, that is a lot. That's a lot.
I'm a total compliance nerd, but I also love people and I love hanging out with my credit union peeps always.
Okay, love it. Okay.
Let's see. I love skiing and the beach. So those are total opposite things. So I live in Colorado, so we can ski easily. And then we like to go to the beach on vacation. What else about me? I've been in the mortgage industry longer than I care to admit. Before I became a boring compliance lawyer, I was on the business side. So I've been sort of sitting in the seats of all of our mortgage folks that are doing the day-to-day, which I think is it provides an interesting perspective for compliance professionals, right? Like most compliance people haven't done the thing. And so being able to know like what people are going through helps in sort of implementing regulations on an operational level.
Okay. I love it.
I gotta know something.
Yeah.
Do you surf when you go to the beach?
I don't.
I was about to say, you're kind of like the modern day Johnny Tsunami, There we go.
No, but my high schooler wants to learn how to surf. So
yeah, so he'd be like the reverse Johnny Tsunami. Yeah, I like it.
We might have
Makes sense.
Might have to let him learn. Yeah.
There you go.
All right, I dig it. All right, so thank you very much for walking us through that. Now, so I've admittedly been amazed by you for much longer than my time here at Acuma. And I'm gonna come off like a little stalker, and I don't mean to.
Yeah.
But a long time ago, I worked at a credit union, and that credit union was looking for an LOS. And I think before you came to ACES or went over to ACES, you worked for Accenture, right?
Yeah, right before ACES, I was actually outside counsel at Ballard's Bar. But before that, I was at Accenture, yeah.
Which has an LOS, right?
They do.
And I specifically remember being in my conference room, and it actually hit me. We were talking, we had our sales rep, in the sales room, and we were vetting this LOS, and we had major concerns about compliance. And the salesperson was like, well, let's get, our head of compliance on the phone. And we had this pretty much 2-hour long conversation with their head of compliance, which happened to be you. And I knew from that moment forward, all of my concerns about compliance, just after a 2-hour long conversation with you, and I know it sounds ridiculous, 2-hour long conversation, I knew that was the LOS that from a compliance standpoint, we would be okay with. And I was absolutely blown away by you, by your general knowledge about everything, that was going to be the right system for us to go with. So again, I was just blown away by your knowledge, everything. It was a great conversation. So I specifically remember that, how you stood out above everyone else, but your just general knowledge. So I wanted to mention that because you, even to this day, you're still someone who very much impresses me about your knowledge, about the way you engage people, because compliance isn't exactly the easiest of things to keep people's attention about.
It can be boring.
I was trying to be nice about it, but yes.
Well, look, unless you're a compliance nerd like me and you think it's super fun and fascinating and you want to talk about it, most people are like, oof, let someone else do that. And by the way, you've never told me that story.
It's true. It's true. And you do a very good job, which is one of the reasons why we wanted to have you on this podcast, because we want people who can take a very difficult conversation, a very difficult topic, and make it easy for people to understand. Because I think it's so important, right? That's why people don't care about compliance, right? Or a compliance topic or a regulation or an act or something like that, because they get lost in the weeds. They glass over and they just stop paying attention. So
it's very dense.
It is. And you do an excellent job.
Well, thank you.
Of clearly spelling it out. And you're extremely knowledgeable. And I think this is why you keep coming back.
Well, I love coming back. So thanks for having me. I try to make these things understandable, right? If you just hand a member from, or one of the team members from one of our credit unions, a 800-page regulation, they're going to look at you like, I know. I don't want to.
Exactly. And and trust me, there are some that are like the one that you and I had a great conversation on back. And this is what I want to say was, maybe like 2018, maybe. 2018, I guess you were at Accenture back then, 18, 19,
yep, I was
maybe?
Still there. Yep.
Okay. I want to say it was like TRID.
Oh, probably.
Because everyone was still so confused, right? And I had, at that point in time, I had just come off, working for a community bank where I helped them clean up TRID. And I had just come off working for an IMB where I helped them implement TRID or get ready for TRID. And so I was still very fresh and knowledgeable off TRID, and the community in the credit union I worked for was still very confused about TRID. And you and I had a great conversation. And so that's a good example of how people still don't get TRID. They just don't.
Oh, no, it's been 10 years and we're still talking about
I mean, I just emailed over my old procedures to somebody. I'm not joking around. I keep everything like in Google, in a Google Drive. I just emailed my procedures over to somebody because they were going through an audit and they were hit for TRID. And I was like, here are some TRID procedures. Just use them. Yeah, they're good. I use them at a community bank and I use them at my last credit union. They're good. Trust me. Anyways, I wanted to pay you that compliment. We're getting off track. So I think one of the things we want to talk about is, in today's podcast is diving into, there's been a lot of changes that have happened lately, within this administrations and, regulations being changed, whether it's at the CFPB or NCUA or FHFA. I mean, you name it. I think right now our industry is, I don't want to say a moving target, but the way we need to operate is ever evolving. And one of the things that we want to dive into is the withdrawal of policy statements regarding the abusive acts and practices.
Yeah.
And we can shape it up to be UDAP, right? But one of the things I kind of sort of want to focus on is, the maybe the post-closing side of things. Whether it doesn't necessarily have to be servicing, it can be servicing, but it can anything. We'll say closing, defunding, and beyond. Because all too often, there's a lot of things that happen that lenders, whether it's I'll say credit unions, just aren't doing. A good example would be the failing to terminate PMI, right? I think there's a lot of components to it that we're just not watching, and I think we need to dive into these things because we could get in a lot of trouble. So I'll let you take it from here, and I'm going to shut up.
No, you're fine. So among other things that have been rescinded recently, they did rescind the guidance on UDAP. Also, if everybody harkens back to 2022, we had the exam manual update that dropped that sort of shocked our industry as well, where the Bureau stated in that exam manual that the unfair prong covered discriminatory conduct under UDAP. Now that went through a bunch of litigation all through the Biden administration, but sort of parallel to the rescission of the guidance in April, we had the CFPB and the plaintiffs who had sued to pull that out of the exam manual agree to a joint stipulation dismissing that appeal. So we've not only had the rescission of the guidance statement, but now we've had the exam manual litigation completely dismissed with prejudice. So there's definitely a shift in philosophy at the Bureau around UDAP. But does that mean that we just don't have to worry about when we terminate PMI? We just don't have to worry about what fees we charge. Doesn't matter anymore. I would say no. We still need to follow the law, and there are specific regulations related to automatic termination of PMI and requests from borrowers to terminate PMI. In service. We won't go into all the policies and procedures you should have to do that and make sure you're covering it. But it doesn't mean that we can just throw our hands in the air and say, we can charge PMI forever. We don't need to worry about it. That's absolutely not true. And we shouldn't take our eye off the ball when it comes to PMI and all kinds of other things, right? But no, completely agree with you that we still need to pay attention to what we're doing. Look, if there's one thing that's certain in our industry, it's change. And we're going through some rapid changes right now. But I think they're sort of consistent with other things we're seeing come out of this administration. Saying that we're going to rescind all this guidance related to UDAP you look at the through line to also, we just had the updates to the supervisory priorities come out. from the Bureau. And if you read through those now, it's a long list. It's 3 pages long. They really say they're going to focus on actual harm to consumers. Well, I would say failure to terminate PMI and continuing to charge a consumer when they shouldn't be charged PMI anymore would be actual harm to a consumer. So it doesn't mean that the Bureau doesn't care about things. It just means they're taking a different approach.
So let me ask you a question.
Mm-hmm.
I was talking to a neighbor, and they are being serviced by your friendly next door neighbor, Mr. Somebody.
Oh, yeah.
Your friendly next door neighbor. And, your friendly next door neighbor has this service where I don't know. I can't remember what service it's tied to, but it shows a value, right? Whether it's a Zillow, like a Zestimate, or
one of the algorithm ones that doesn't estimate a value of your property. Yeah.
But based off that estimate, my neighbor's saying, well, I'm now at a 67% LTV, right? But I'm still being charged PMI. And so my neighbor, knowing that I'm still in the mortgage industry, asked me, isn't this just supposed to drop off? I'm like, well, you probably should call, right?
Yeah.
So let me ask you now, based off of this information, doesn't your friendly neighborhood sub-servicer have enough information based off their system? Shouldn't they have automatically done something?
Unfortunately, automatic termination is not based on actual value or estimated values from AVMs or, I think even where my deposit accounts are. I think I have an estimated value like tied in there. It's not even my servicer. Like I can tie in my home and I get value. You can get values all over the place. But your automatic termination point is going to be based on the loan that was originated. So it's going to be based on the value at the time that loan was originated, and automatic termination gets calculated based on LTV from the original loan. So let's say you were at 90%, right? And it's going to be either based on your purchase price or your appraised value. So if it was a refinance at 90%, right, it's going to be your appraised value at the time the loan was originated. And that's how they're going to amortize that out. You're going to have automatic termination at the time that your loan is scheduled to be at that point. The borrower requested termination is different. I don't have it as well memorized, unfortunately, as the automatic termination provisions. But that's the whole give them a call situation. What are your procedures? If I say, oh, I'm below 70% now, like how does the servicer handle that? But on automatic termination, unfortunately, your Zillows and your, there's 100 of them out there, right? Redfin and everywhere else. Those aren't going to help you with automatic termination, unfortunately.
Well, I mean, so it's a good question. No matter what, there's probably enough data out there for at least to prompt that person to make the phone call, though. No matter what.
Yeah.
Okay. See, that's good to know, though.
Yeah.
Okay.
I tell people that it's true. It's as true when you're not in a delinquency risk situation as when you're in a delinquency risk. We tell folks all the time, like if you're in a delinquency risk situation, like communication with your servicer up front is the most important. We tell our servicers, like, make sure you're communicating with your customer and your member, especially if they're, in a delinquency risk situation. But I personally think, like, even when you're current, if you have questions about your loan, like, pick up the phone and call them. They should talk to you.
So I'm going to go down a rabbit hole if I can.
Yeah.
But isn't putting that value on the website after you log in and saying this is what your property's worth, right? Here's your loan balance. Here's what your property is worth. Here's your total equity. Isn't that a little deceptive?
I'm going to give you the lawyer answer, which is it depends.
I love it.
I I would say it depends how it's presented on the website, right? Like your contract on your loan is one thing. So if let's say you have PMI, right? Like that's all going to be governed by that contract. Servicers use estimated values and estimated equity for all kinds of reasons, not the least of which is marketing potential. If they're also a lender, right? Potential refi or equity loan or that kind of stuff. It's a marketing tool as well. But as long as disclosures are conspicuous and, not misleading and you're making all your disclosures, I would say not necessarily deceptive.
Okay. Hey, you have to ask.
It depends. You could definitely create a website that's very deceptive and you could hide the ball on people and do all kinds of things. But I know none of our credit union members would do anything like that.
Oh, of course not. No, the credit unions. We only care about the people.
That's right.
That's right. All right. So obviously that's PMI, and that's how it ties back to obviously UDAP. And another thing that was recently withdrawn was the charging of unauthorized and unreasonable amounts of fees, right? So this one is interesting because does this open the door for you to be able to charge the overdraft fee for anything?
That's a good question. So yeah, it was part of the same guidance that the overcharging or charging of unauthorized fees was considered a UDAP violation. So there's no official guidance on it anymore. But see, it's the compliance person. But could you still get sideways by charging an unauthorized fee or charging an overdraft fee? Or the one I think of that was really a hot topic under the Biden administration was the pay by phone fees for
the payoffs, right?
Well, charging a fee for a payoff, that was a big no-no. But also it was the pay by phone. So let's say you're 1 day away from a late fee for your mortgage. There were servicers that were charging a fee to call and pay with their bank account on the telephone instead of mailing in a check or paying online. So it was these pay by phone fees, which I didn't really have most of the servicers I know were passing through the charge that they were being charged by the service to be able to accept and process those pay by phone fees or pay by phone payments. And so as long as I would say there's potential that those fees could be allowed as long as they are clearly disclosed, they're not overcharged, they're not a surprise, they're not, it goes back to disclosure requirements. And actually circling back to the enforcement priority list that was put out by the Bureau, they said that disclosure statutes are their best and biggest tool. So it's all about, we're back to basics, right? Make sure you disclose things to your consumers, make sure you're clear, make sure you're not, no surprise fees, I would say, like make sure everybody knows what they're getting into, but also consider that like we may still see activity from state attorneys general out there and state level regulations. So I think it comes down to making sure that you are clear, transparent with your consumer, and just doing the right thing.
Okay. All right. So you said that the charging for a payoff is a big no-no. Now, this was something that came up last year. Was that part of the guidance that was withdrawn, or is it still out there? Like you can't charge for a payoff?
That is a really good question, and I cannot remember.
Oh, I threw you a curveball, didn't I?
You did. You got me, Peter.
Because I feel like that was like towards August, right? And that was a proposed rule that Chopra was really considering about, right? I can't recall if that actually went through though,
or if it was one of the ones that they're pulling back under the Congressional Review Act. I can't remember either.
Anyways,
there's been so much going on. It is truly hard for all of us to keep track of all of the different things that are happening.
But I mean, he did group that into that UDAP fee, though. He did, Chopra, that is, did say that was a unfair and deceptive fee for you to be charging. So it'd be interesting to know whether or not that was included in that. So next thing, and the last thing that we want to figure out is all of the loss mitigation rules that were rolled back. So if you could, for the sake of time, what were some of the loss mitigation rules that were clawed back as part of the UDAP things that we really should focus on?
Well, we saw some agency action where some of the loss mit guidance was the end dates were pulled back to September. I really think the big one for the industry as a whole, those weren't really cataclysmic. They were, like COVID stuff. Instead of being extended out into 2026, we pulled things back to September of this year. But there was the proposed servicing rule amendments that were hanging out there. If you remember, those came out about a year ago, actually.
Yep.
Frankly, the intent that was given for these amendments was we learned a lot of things about streamlining loss mitigation during COVID, and that streamlining loss mit is good. I agree with that. The whole industry agreed. Like, we learned a lot about streamlining loss mit and that it works. And it's not just good for servicers and the industry, but it's good for consumers. But then they put out this proposed rule that was, my personal opinion, atrocious. There were just too many operational issues presented. There were too many gaps in how things would function. I mean, essentially the way the rule was written, you could, a savvy consumer intentionally trying to do so could create a loop of forbearance that just went on and on and on. It just wasn't well written. And a lot of really great comments were given back to the Bureau during the comment period about, yes, we want to streamline loss mit, just not like that. Can we fix some things? Can we do this better? And I was really hopeful that we would get a final rule that was good for consumers, good for industry, streamline loss mit. The industry wants this. This isn't something we don't, like, the industry doesn't want. We want it desperately. But that's just, it's out there. So there's no final rule. We don't have anything. And I haven't heard any rumors that they're actually going to do a final rule. But that is one I would love to see the Bureau say, okay, industry, you're right. The way we did that in 2024 was not great for anybody. Let's amend our Reg X servicing rules and create a streamlined loss mit process that works for consumers and the industry from the lessons learned from COVID. That's the big one I want to see happen.
Okay.
Still holding out hope. Hope.
It's interesting, right? I mean, the big question is, though, it's like, a lot's happening, right? And, recently, a gentleman I forgot his last name, but I know his first name's Eli, from Tim Scott's office, just went over to CFPB. And obviously you have Calabria over there. So it's kind of interesting to see, how they are, reshaping the CPB, and you kind of wonder what direction they're taking this, right? Yeah. They're putting some people in there, like obviously Calabria, and you have people from this gentleman from Tim Scott's office. But again, it's a skeleton crew now.
It is.
But are they actually going to start putting out true guidance? Or is this still more of assessing and evaluating to the point where, all right, let's just continue to clean up the mess that we have right? Like, I think we still need clarification on a lot of things. And
I do too. I mean, they pulled back 67 guidance documents, I think,
so
going
many.
back to 2013.
Yeah.
So it's like, okay, we stripped away all of that, some of which, you know, industry's happy about, some of which they're not. Like, it's a mixed bag of things that were pulled back. And you're right, it's a skeleton crew. They're also immersed in a lot of litigation around sort of the way things have gone down in the last several months. And I'm really curious to see sort of what the go forward approach is. I feel like, are they done doing the housekeeping they want to do? I have no idea. I wish I did. I'll get out my crystal ball for all of us and we'll just start making predictions. But I am cautiously optimistic that when things settle a little bit, that maybe we'll start to get some guidance again. I'm holding out hope.
Okay. All right. Well, Mandy, we need to start transitioning to the second segment. And thank you very much for all of the important information. Before we do, though, again, I always, like I said, I always end with the same last question. The last question is, what keeps you going? I think it's a good balance to the first question. We found out who you were in that first question, and the second question is, the last question is, what keeps you going? What keeps you motivated? What keeps you driving forward, day in, day out? So, there you go. What keeps you going?
I think there's a dual answer to that. My kids keep me going, for sure. They're definitely a big part of my why. But honestly, it's the other piece, like on the professional side of things, what keeps me going is I have been eternally blessed with all the wonderful people that I get to work with, not just at my own company at ACES. I am lucky in that way. I apologize for the dog barking, everybody.
No, it's fine.
I am at home. But also all the people outside of my company that I get to work with. It includes you and Krista and Justin and everybody at Acuma. But, you know, the folks that I know from previous companies, I still talk to folks at my old LOS. And I get to continue to have those relationships. And the fact that we in the mortgage industry, we are really lucky. We have a great group of people and we have amazing connections to each other, and we can really help each other when we want to. And I think I've been lucky enough to work with people that want to help each other and not just help, their little company, but and being part of the credit union space is a big part of that. It's sort of that same, sense of community, and that we're all in this together and we're all trying to get to the same place. But it's just great people.
No, I love it. Love it. Love it. Love it. All right. It's time for us to transition to the second segment of our podcast. No, just like every other compliance episode, we're going to do the most requested fan favorite series of dad jokes. So prior to the recording, I asked you to come prepared with 2 to 3 dad jokes. And of course, we're always just going to do 2 dad jokes. Here's what we're going to do. I'm going to have you do your 2 dad jokes. Justin's going to do his 2 dad jokes. And I will wrap up with my 2 dad jokes. So, Mandy, whenever you are ready, fire away with your 2 dad jokes.
All right, Peter. When does a joke become a dad joke?
When?
When the punchline becomes apparent.
Good one.
That's my new favorite one. I like that one. All right, I got another one. How did the barber win the race?
What do you do? Cut someone?
Cut someone off? Cut someone off?
He knew a shortcut.
He knew a shortcut.
There we go.
Oh, there
we knew it had something to do with the cut.
Yeah, that's right. That's right. There you go. All right. Excellent. Excellent. All right, Justin.
All right. I hired a handyman and gave him a to-do list. When I got home, only items 1, 3, and 5 got done. Turns out he only does odd jobs.
I like that one.
Yeah, that was a good one. All right. And then why did the knight surrender once all his limbs were cut off?
Wait, one more time?
Why did the knight surrender once all his limbs were cut off?
I thought you said once all his loans were cut off. I was like, this is a mortgage joke?
A mortgage dad joke?
We have had those.
A lot of them.
Oh, I need to find some.
Why did the knight
surrender once all his limbs were cut off?
Why?
I don't know.
Because he was unarmed and defeated.
Oh, that's a good one.
All right, my turn.
All right, Peter, you're up.
How do you make an egg roll? You push it. All right. Why can't you hear pterodactyl going to the bathroom?
Oh, come on. Do you really want to go with that one?
The P is silent.
Still a good one, though.
It's a good one. Oldie but a goodie.
Yep. All right. Well, that wraps up this episode of Dad Jokes. Mandy, thank you very much for everything that you do for our industry, and being, a great guest. And of course, looking forward to seeing you at Annual. We have a great session focused on fair lending that I'm really looking forward to having you be a part of. So thank you for actually you volunteering as tribute for that one.
I cannot wait. Hey, y'all are coming to my hometown, so right. I'll see you in Denver.
That's right. Thank you very much. And Justin, thank you.
Of course, it was my pleasure.
Of course, and to close out, thank you again to Consolidated Analytics for sponsoring today's episode. And to all of you, we know your time is valuable. Thank you for tuning in to the latest episode of Acuma's On Point podcast. We hope you enjoyed it. Until next time, be well, my friends.
Thanks for listening. We'll see you next time at the Acuma On Point podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, be sure to visit us online at acuma.org. And to get the latest updates, head over to our LinkedIn page.